Hello, this is Gary Schnittke, and in my April 10th, 2018 article, I discussed 2018 acreage decisions given the recent turbulence in the corn and soybean markets. Both the corn and soybean markets has had some fairly large price changes within the last several weeks. On March 28th, the settlement prices of the November 2018 soybean CME futures contract was $10.16. On the next day, March 29th, the USDA released the Prospective Planting report. That report had 89 million acres of soybean projected as being planted, 1 million bushels below last year. At the end of the day, the November 2018 soybean contract closed at $10.47, an increase of over 37 cents per bushel. Over the next several days, the soybean contract varied but largely maintained those gains, closing at $10.42 on April 3rd. On April 4th, China announced its intentions of placing a 25% tariff on soybean imports from the United States into China. That resulted in a market loss on the CME futures contract. On April 4th, the contract closed at $10.19. Over the next several days, the soybean contract increased and regained back some of the losses on April 4th and had a settlement price of $10.33 on April 16th. So over the past several weeks, soybean contract has varied, but overall closed up higher than before the release of the March 28th report. At the same time as we've had volatile soybean futures contract, the soybean volatility has increased. The index is now trading over 0.2. That compares to values below 0.16 earlier in the month and throughout much of March and February. Overall, traders are expecting more turbulent or more chances of downside price risk on the soybean contract after China intends to put a 25% tariff on soybean imports from the United States. We revised budgets based on current fall delivery bid prices for both corn and soybeans. In central Illinois, farmers could contract to deliver grain in the fall at $3.80 for corn, $10 for soybeans. These prices are actually higher than the ones we used earlier in the 2018 budgets. Given those prices, operator land return for corn after soybeans is $2.56 and soybeans after corn is $2.95. We are still projecting soybeans to be more profitable than corn. Still, the soybeans after soybeans budget has a return of $2.60. That is almost equal to corn after soybeans, $2.56. Basically, corn and soybean budgets in central Illinois are suggesting a corn-soybean rotation. When we move to southern Illinois and use those same prices, $3.80 for corn, $10 for soybeans, we have soybeans being more profitable than corn, and soybeans after soybeans being more profitable than corn after soybeans. These budgeting results suggest heavier soybean rotations in southern Illinois, and that is what has been happening in the last several years. Overall, budgets do not suggest large changes in acreage. We would be getting roughly these same comparisons earlier in the winter using prices prevalent at the point in time. The major thing that has changed in the past several weeks is increased downside price risk, particularly on soybeans. Hedging through either forward pricing or use of futures contracts seems like a prudent move at this point in time. Farmers can contract for delivery on April 9th and 10th at roughly $10 per bushel on soybeans. Most farmers should be profitable at that level. And again, that suggests hedging soybeans may be a prudent move at this point in time. More detail is provided in the April 10th article, and in that article we also discuss crop insurance implications or risk protection offered by crop insurance and by the ARC PLC program.